What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over the reason why I don't trade like Ross Cameron from Warrior Trading. Check it out. All right, guys, so the reason why I don't trade like Ross from Warrior Trading and buy those breakouts, in essence, buying higher to sell higher, is very simple. It's a very simple concept, and I'm going to show it to you on the charts, and I'm going to show you why I don't enter where he enters for the most part, or other similar traders who trade that type of strategy. Why I don't do that. I'm going to show you on the chart. I used to do that when I first started trading, because when I first started trading, one of the very first channels I ever watched was Warrior Trading's channel, and I learned a lot. I'm not going to say I didn't. I learned a lot watching Ross trade, and I learned a lot of different type of setups, etc. But there's a few reasons why I don't trade specifically like that, and I'm going to show you on the chart. So just come with me. I'm going to show you right here real quick. Just come check it out. Come on. Don't be shy. All right, guys. So now that you've actually followed on over, I'm going to go ahead and show you exactly why I don't buy breakouts anymore, and why I don't follow, the type of traders that do teach these type of breakout strategies, and also why I think these are not good strategies for new traders. I mean, if you put me in a simulator right now, I can scalp my way to $1 billion, okay? Why? Because there's no emotions. I can jump into a simulator and, grab 10,000 shares of something, risk $1,000, $2,000, and take the trade, and there's not going to be any emotions. It's a freaking video game at that point. At this point right now, for me, a simulator is nothing more than a video game. It's great to test out strategies, don't get me wrong, I will do it, and I recommend that any new trader trade in a simulator for as long as it takes them to show that their strategy is working and they're profitable in the simulator. Just because you're profitable in the simulator doesn't mean you're going to be profitable as soon as you go live with your real hard-earned cash. Okay, so I'm going to show you here why I don't trade like Ross and other traders who trade a similar strategy. So typically you'll see these traders like to trade breakouts, meaning the stock has opened up and is either breaking over a pre-market high or pre-market pivot, or it's breaking the high of the day and they're going into it at that point. And I'm just going to show you 3 charts here with 3 different scenarios. So scenario 1 right here is failed high of day breakout. We see this more often than not, especially during the summer months when the market is really choppy and volume is really light. So what you see here is this chart here, CCCL, made a real big nice move here right at the open, and went from like $1.40 all the way up to probably somewhere near this $2 area. And what happened was we set a new high here. And then this next candle, these are 3-minute candles, this next candle, so you imagine the 1 minute, how choppy that looks. So this next candle opens up, dips down, breaks through, makes a new high of day, pulls back instantly, and then chops around here just under 180. Then we have a new high of day made right here. However, it's a failed high day breakout because we didn't continue to push. We didn't consolidate here and then push. We pulled in all the way back down. So if you bought the break over this candle, like many of these people teach you, you would have been stopped out if you weren't quick enough to take whatever this is, 5, 6, 7 cents of profit. Buying these breakouts is a scalper strategy. It really is. You have to be extremely quick, have extremely good hotkeys, and direct access routing guaranteed for sure. You need that. And then you got to fight every other scalper for these pennies. Okay? So then we have this pullback. Then we have a new push onto a new high of day on weaker volume than before, and then we have a continued failed and a fade. So this just continued to fade. So if you're buying high up here to sell higher, you are putting yourself in an extremely stressful situation because everything's going insane in this little area for those few seconds. And if you're buying a lot of shares and you have a lot of risk, you're going to be nervous. I mean, if you're buying this high a day break here, where's your stop at? Is it a trivial number? Did you just pick it because this is the X amount of dollars I'm willing to lose on this trade if it works, or if it doesn't, if it doesn't work out? If that's the case, then you're going to be extremely nervous because you're going to be seeing, especially if you have your P&L up on your screen, you're going to see that thing whipping around crazy. There's going to be a spread that's going to be hard to get out of. It's just not conducive of a friendly environment for a new trader. It's that simple. Even in a simulator, this type of trading used to give me anxiety when I started trading. I'm not here to tell you this type of trading doesn't work and people can't make money, because it's proven that people do make money. However, this is not the most easiest way for a new trader to learn to trade. How much safer would it have not been for you to have waited for this pullback to happen in here, gotten long down here once you saw this basing here, or after this new high when we pulled back in and tested this area again, gotten long there and sold into this push? A lot less stressful. A lot less stressful. You let the chart do its work. You have this pullback here, a doji candle, which is generally an indication of a trend reversal. If the trend is going down here as we pull back and we doji out here, the next logical explanation is that we have a good chance at a push, which we see here. So that's a failed high of day breakout. Now I'm going to show you a failed red to green move here. Let's bring this over. And yep, you see it right there. So oftentimes, you know, if the stock opens up and sells off, you're going to get people, breakout traders, who are going to want to buy the break over this candle. The strategy sound in theory, because you would think the shorts are going to cover, but not really 100%. Why? Because look at this. This happens a lot of times. You have the drop, you have the pop back up, and then it fails. Look at this engulfing candles. This candle here engulfs everything that just happened, and then we fade. If you were to trade like how other traders trade, me and other traders that on YouTube, we would have gotten long. If we were going to trade this, we would have gotten long a starter position in here, added on the VWAP break, and taken some profit here and held on to the rest to see if we push. If we don't push, we stop out in this candle, or we stop out down here at break even. Okay? But how much stress-free, much more relaxing wouldn't it be to take a starter position here with your stop probably at this case about 6-7 cents just, you know, below your entry, versus getting long up here, getting stuffed, and then getting caught in this mess here and losing 20 cents a share just like that. That's another reason why this breakout trading doesn't really work for everyone, doesn't work for most traders, and definitely is extremely hard for new traders. This is another reason why I don't trade breakouts, why I don't buy breakouts, and why I don't trade like all these guys that you see there on YouTube that trade this strategy. And then lastly, I'm going to show you here how to spot a breakout fake out. Okay. Here we have SGYP. This thing gapped up and then pushed right at the open. Real nice push. Made a nice little U shape here to put in a new high of day. Okay. Now we had amazingly good volume. Look at this volume here. We had amazingly good volume on this push. Real nice decreasing volume on this pullback. I personally would have been looking to get long in this area, holding this area down here as my stop. Okay, and then I would have looked to have taken some profit off in front of the high of the day, held onto a piece looking for the extension move. Okay, lots of people trade this way. This is nothing new. Lots of people trade buying breakouts. That's nothing new. Okay, no one that you're seeing on YouTube coined any of this. This has been around. I'm 35 years old. This has been around since I was like 12 minimum that I remember hearing people talking about stock trading. Okay, U-shapes, breakouts, triangles, all that stuff. I've heard about it all my life, even though I never really traded stocks up until now. Okay, so I'm sure it was around way before then as well. So no one's coined any of this, even though their marketing teams have shown you otherwise. So you have this pullback on decreasing volume, then you have to push to a new high. This is the previous high of day. It pushes like probably a couple pennies on weaker volume. Okay, lighter volume than earlier by comparisons. High of day, huge volume, new high of day, lighter volume, and then we have the instant rejection and a bit of a fade going. Okay, I mean, it makes a new high and instantly pulls back. That's a sign right there of weakness. That's a bearish signal, and that's another reason why you would not want to have bought this break of high of day. Buying these breakouts is extremely risky. If you're a new trader, I would highly recommend that you study this in depth,
trade in a simulator until you show that you're profitable, and test out many different strategies. See which one really fits in with your personality. I don't trade like these other traders, even though I tried at the beginning, because it's just not for me. It doesn't fit my personality. It makes me extremely anxious and it gets my heart beating, and I cannot think and let the chart do its thing. I'd rather buy these pullbacks into support with an exact, risk level and allow the chart to do its thing. Many times I get into these entries like I did earlier today. I set my hard stop in place and I just sit back and let the chart develop and do its thing. Show me what it's going to do. As it develops, I might choose to get out early. I might choose to add to my position, because I'm letting the chart do its work. These small caps can get extremely volatile, especially when they have very low floats. So buying these breakouts, high day breaks, pre-market highs, etc., is extremely risky, especially for a new trader. You're your own trader. You got to do what you got to do, but make sure you inform yourself extremely well and don't just take anyone's word for it, not even mine. Do your due diligence, study hard, practice every single day, read and learn, and you're going to be able to get this done little by little. Remember, it's a marathon and not a sprint. If you like the video, smash that like button. Remember to subscribe for me, and I'll catch you on the next one. Take it easy.